It is 9:14, the 14th of September. This is accounting 122. Hi, everybody. I'm sorry it took me till Wednesday to get back to you on this question. As you know, I at the end of the night last Monday, I was like, I don't know, I was just fried. I didn't have the brain power to give you the correct answer on number 6 in particular. So I want to go over number 6, and that'll explain the rest of the that homework on chapter 15. So, as I said, we're on chapter 15 homework, and I just want to make a quick YouTube and throw it up there for you so that we got through this, and lest you are struggling the way I was the other night. So, mea culpa, mea culpa. I'm going to go quickly. We've got Virgo Bay, accounting system generated following account balances. Our problem was we couldn't get COGS, and that was a big problem because it was the crux of everything else. We could get net income by the last year's retained earnings, which were up here. Factory wages. There was a hint. 402 or jobs hint. Retained earnings is 124, 400 at the end of the current year. So we could back into our net income that way. But let me first show you what I found. I figured it out, and the biggest problem here for you as students was in my interest of making the homework not as long. I left out what I would consider crucial steps that would have helped you understand the problem. So again, this is my bad as your professor. So I want to show you on this lovely Course Hero website, which I go to once in a while because they have great graphics a lot of the time, and I get in there for nothing. As I said, you're welcome to use anything like this. In the interest of learning, I don't consider it. I don't get weird about it might be cheating or some BS like that. I want you to learn this stuff, so I really don't care where you go to do it. And I think anybody whose pedagogy is different from mine, I don't agree with. I just don't. Here I go off the pedestal. This is the same problem. However, different numbers, 77, 46. Maybe these are your numbers. 402 and 404 are the only job in process that you're in. Now I'm going to show you specifically in this homework. It's number 9. But look what happens here. I should have given you these 2 other steps, or 3 other steps, I should say, in order that you understand the problem better. Journal entries, and then here, requirement 2A and 2B. In factory overhead T account, enter amounts for part 1 related to factory overhead, determine the amount of over or under applied overhead, and prepare the entry to close any over or under applied overhead and cost of goods sold. So when I did this problem, now we'll go back to what I showed you. All I did was income statement, balance sheet. Well, the other steps in between would have really helped you understand the question. But as you know, especially after doing 121 in McGraw-Hill, and except for Mr. Snow, I'm not sure how many, maybe the Steamboat people will relate, like, well, we didn't do McGraw-Hill. We didn't, we don't know how long it took or anything like that, so it doesn't really matter. But nonetheless, if I had done it in 5 steps instead of just doing the balance sheet and the income statement, the question is easier. So anyhow, So you have this factory overhead thing, and then this one, allocate over underapplied. So, and then of course, they had the list of account balances here. That would really help. So now let me go through the explanation, and here it is. So journal entries in number 1 is right here. So you can see from the work in process inventory, and there's good explanation down here. $4,100 direct materials cost to job 402, $7,000 job 404. Now, even if your numbers are wrong, that explanation should help you out a lot. And it is to record direct materials for 402 and 404 to work in process inventory. So that's where they go. And then B, factory wages payable, and 4,000 direct labor costs to 402, 16,000 to 404. That goes into work in process. And then C, 30,000 to factory overhead. This is a predetermined overhead rate is 150 of direct labor. So 150 of 30,000. 150% of 30,000. There's that. Factory overhead, 2,000 to raw materials inventory. We'll get to that in a minute. And then factory overhead to factory wages payable to record these indirect materials and indirect labor. Remember from here, indirect material, indirect labor, 5,000 and 2,000 in this case. Okay, back down here to this explanation. Now the revised factory overhead account is here, and this is what you probably thought, I didn't know how to do that. This is how you would approach this problem. So the ending balance from the trial balance was 25,000 for factory overhead, right? Going all the way back to here was 25,000 right here, factory overhead. If you look at this line item here, 25,000. So then what happened? Well, we credit work in process inventory the 30,000. We debit wages payable. We debit raw material inventory, and then there was this underapplied overhead to get us to 32,000. Is what happened. So that gives us a different factory overhead, and then in the general journal, we added 2,000 to the cost of goods sold because of this underapplied overhead. Revised factory overhead account gets 2,000, and you can see how that plays out. It's underapplied. The difference between 30 and 32. 30, 32. Okay. So now in list of account balances, this is really where it begins to help. This is where the rubber meets the road with this problem. So we had cash, we had AR, then we end up with raw materials inventory changing by this amount. So it ends up in this case being 14,009, right? Minus 4,100, minus 7,000, minus 2,000. Now, where did those numbers come from? They came from 4,100 direct materials. Came from these 402 and 404. So we go back over here. And we go, okay, there's the numbers from 402 and 404, 4,100, 7,000, and then minus that 2,000. So our work in process inventory, it says, this person who solved this said, check the note. So let's go down to the note on work in process inventory. Here's here's the note 1, right? Direct material, direct labor. And note 2, over and under applied overhead. And it gives you the numbers so that you can follow it. And you got that 14,100 is where that goes into that step-by-step explanation. So hopefully that helps. 14.9 raw materials inventory. Then the work in process inventory ends up being 61,100. Finished good inventory 12,000. Prepaid rent, I think that will stay the same. Factory wages payable. Here's those numbers from the data up top. That ends up being 25,000 in a liability, a payable. And then we have the rest. Cost of goods sold is here. 118,000 plus 2,000 is 120,000. That's note 2, right? Under applied 118,000 plus the 2,000, right? And that's how it ends up. Indirect material, indirect labor, factory overhead, overhead applied, and the over and under. So despite, it's a complicated problem, but I made it worse by not giving you these steps. Right? So here's G&A and finally our totals, everything, we've got the credits matched to debits. So the income statement in this case ends up being 192.8. Cost of goods sold is the 118 plus the 2,000 gives you 120. Gross profit 72,800 and G&A 37,000 for a net income of 35,800. And then here's the balance sheet, and I'll go down a little bit so you can see the whole thing. There they are, cash. Finished goods inventory here, right? Raw materials inventory, work in process, and finished goods inventory all together makes 88,000. And then our liabilities, we've got those payables and factory wages payable, right? And so our total liabilities up there. Retained earnings 91,000 plus 38,500, 126,800. So now there's those notes once again, if you didn't see them clearly. Now hopefully this is going to be helpful. I'll again, these extra steps are really and I'm going to have to change. I can't change the software now because people are in it, and that's a pain in the neck. But we can go over this problem again in class if there's any questions post here. But the thing to understand, of course, is that if you go through these steps and make these adjustments, you're going to be okay. And unfortunately, I just didn't have my head wrapped around it well the other night. Let me look at this again, just so if you're following along, this might help. So here's the revised factory overhead account. They just do a T account here, which is a great, I would be scribbling this on paper to show you, or on the board. And there's a list of account balances at Bergamo Bay. And then finally, income statement, balance sheet, which was our question, income statement, balance sheet. And then finally these notes. So they wanted to get you to get your head around under and over applied overhead, and as well as changes in cost of goods sold due to unfinished products, etc. this is costing, okay? And I'm sorry we couldn't get through it the other night, but take a look at this and hopefully it's helpful. And I will speak with you. If I find any other really cool examples, I'll put them out there so that this becomes easier, because it is a tough part of the course, I think. And costing, of course, there's courses on costing, and you'll you'll get what I'm talking about. People who can do costing well are going to get paid, and I have a good sense of costs, but the nuts and bolts here obviously are very important. Okay, that's it. I'll shut up and send this out so that y'all can use it. Thanks for watching. We'll catch you next Monday, if not before.